Hi, and welcome back. To be very honest, when we talk about the Indian stock market, everyone is busy chasing the next tech startup or fancy fintech app. But look closely at the skyline of any major city or the massive highways connecting our states. There is one giant that has been doing the heavy lifting for decades without much hullabaloo. This isn't just a company, it is the very backbone of India's infrastructure story. From building the world's tallest statue to constructing complex nuclear reactors. If you are an investor looking for solid fundamentals and a play on the Make in India theme, you simply cannot ignore this behemoth. Today, we deep dive into why this infrastructure giant is perfectly positioned to ride the upcoming $1.4 trillion capex wave. Let's get started, shall we?
Now, let's talk numbers. And believe me, these figures are absolutely mind-boggling. As of the latest filings, this order book stands at a whopping 4.75 lakh crore. Just think about it. That's more than the GDP of many small nations. This gives the company massive revenue visibility for the next 3 to 4 years. What's even more impressive is the mix. Roughly 65% of these orders are from the domestic market, largely driven by the government's Gati Shakti and National Infrastructure Pipeline. But they aren't putting all their eggs in one basket. About 35% comes from international markets, especially the Middle East. Whether it is the Mumbai-Ahmedabad bullet train project or massive refinery expansions in Saudi Arabia, this is the first choice for complex engineering. The execution capability here is top-notch, ensuring that projects don't just stay on paper, but actually hit the ground running.
If you think this is only about mixing cement and laying bricks, you are mistaken, boss. They have pivoted beautifully into high-tech segments like defense, aerospace, and precision engineering. They are the ones building K9 Vajra T-guns for the Indian Army and critical components for ISRO's Chandrayaan missions. This Atmanirbhar or self-reliant push by the government is a huge tailwind for them. By indigenizing sophisticated technology, they are moving up the value chain where the margins are much better than traditional civil construction. They are also making big moves in the semiconductor space and data centers. It's a proper transformation from a construction company to a technology-led engineering powerhouse. For a long-term investor, this diversification reduces risk and opens up multiple growth levers. The level of precision they maintain is truly world-class.
Every big player is talking about green these days, but this is actually putting their money where their mouth is. They have committed billions to the green hydrogen ecosystem. We're talking about setting up massive electrolyzer manufacturing units and green ammonia plants. The goal is simple: to become a net zero company by 2040 and help India achieve its energy security targets. This is not just jugaad or a small pilot project. They are building utility-scale green energy infrastructure. They have partnered with global experts to ensure their tech is cutting edge. As the world shifts away from fossil fuels, the early mover advantage in green hydrogen could be a total game changer for their valuation. It's about being future ready, while the rest of the market is still catching up. This green pivot will likely attract a lot of ESG-focused institutional investors in the coming years.
We often forget that this isn't just about heavy hardware. While the core EPC business is capital intensive, these service businesses are asset light and generate high return on equity. This is now a formidable force in the IT sector, competing with the likes of TCS and Infosys. This is a global leader in pure-play engineering R&D. These subsidiaries provide a steady cushion of dividends and royalty to the parent company. In fact, many analysts believe the sum of the parts valuation of this is much higher than its current market cap because of these stellar performers. It provides the group with a very healthy balance sheet, allowing them to take on those massive multi-billion-dollar projects without breaking a sweat.
Don't think that this is only dependent on the Indian government's budget. Their international prowess is legendary, particularly in the GCC region. With oil prices stabilizing, the Middle East is on a massive diversification drive, like Saudi Arabia's Vision 2030. EVL is winning mega orders there, especially in the hydrocarbon and power transmission sectors. Just recently, they bagged several multi-billion-dollar contracts for gas compression plants and solar parks in the desert. The beauty here is that these international projects often have better payment terms and help in diversifying the currency risk. It shows that an Indian company can compete and win against global giants from Korea, Japan, and Europe on neutral ground. Their reputation for delivering quality on time is so strong that they have become a preferred partner for giants like Aramco.
Look, I won't paint a picture that is all hunky-dory. Like any big business, Larson faces its fair share of headaches. The biggest one is the volatility in raw material prices. When the price of steel or cement shoots up, it can squeeze the margins on fixed-price contracts. Then there's the execution risk. Large projects often get stuck in bureaucratic red tape or land acquisition issues, though things have improved lately. Working in international geographies also brings geopolitical risks. Any instability in the Middle East can directly impact their execution timelines. Also, keep an eye on the rising interest rates, which can increase the cost of working capital. However, this management is very seasoned. They have seen many cycles and know how to navigate these rough waters. They are increasingly moving towards price variation clauses to protect their margins from inflation.
To wrap it up, L&T is basically a bet on India itself. If you believe that India will become a $5 or $7 trillion economy in the next decade, L&T will be at the heart of that journey. With a record order book, a high-tech pivot, and a strong services portfolio, it's a diversified conglomerate that offers both stability and growth. Yes, the stock might not double overnight like some small-cap multi-bagger you hear about on WhatsApp groups, but it is a wealth generator over the long term. For any serious investor, this is a portfolio staple. So next time you see a massive flyover or a metro line being built, check the barricades. Chances are it says L&T. Do your own due diligence, consult your financial advisor, but keep this giant on your radar. What do you think? Is L&T part of your portfolio? Let us know in the comments below. Dhanyavad.